Hi, I'm Monk and this is the Monk Way. Uber just filed for the IPO. This means we can invest in their stock soon. Let's analyze them to see if they might be a good investment. We'll use all the numbers we have to make some predictions, and use the recent Lyft IPO as a comparison. Watch this whole video because I'll tell you how much I think Uber's price will be. One of the first times that I'll make a bold prediction. I'm not recommending you buy this stock, this is just an educational video. Subscribe, hit the bell, and leave a like for more investing videos. I make them every day. And look in the description for a link to my investment group, where I show you guys every single move I make in the markets. A recent winner was Aurora Cannabis, up 50% so far. I also have some links to the best investment platforms below. Let's start with some basic information on Uber and Lyft. Uber was founded in 2009, and Lyft was founded in 2012. This gives Uber an edge being the first on the market. Uber has most of the market in North America, at around 70%, with Lyft having 30%. They're both leaders in ride-sharing, because there's only about 1% in competition. This means whoever wins will have a monopoly on ride-sharing. Both companies are apps that let you call rides to your location. Drivers can install the app and give rides, getting paid for doing so. Uber and Lyft are the middlemen, not actually owning any cars. Even without cars, they're both losing money. This is because they offer rides at such low discounts. They have to go out of pockets for a lot of the rides, so they lose money whenever someone rides with the app. This is mostly due to competitive pricing to get more customers. Now let's analyze Uber stocks. Since we don't have a stock price history or valuation numbers like the PE ratio, we have to value Uber by the numbers they gave us and comparing them to another company in Lyft. So before that, let's look at Lyft stocks right now. Lyft went public 2 weeks ago, and in 2 weeks, it's actually 23% in the red. This is not a good sign for ride-sharing companies, but maybe Lyft was just overpriced. This is very helpful because we can get an idea of how the market prices this sector. If Lyft is making a certain revenue, Uber might be the same price if we're comparing just the revenue. Lyft has a market cap of $20 billion right now, so the whole company is worth about $20 billion. They made $2.1 billion in revenue in 2018. This is pure cash before any costs, giving them a price to sales ratio of 9.5. So the market thinks this price to sales ratio is fair for Lyft. We'll use this number to see where Uber would be if they're priced the same way. Uber just filed for the IPO for May of 2019. You can buy them with the symbol Uber under the New York Stock Exchange. They're expected to be worth about $100 billion. This is currently 5 times bigger than Lyft. An important number is their revenue for 2018, which was $11.3 billion. Compare this to Lyft at $2.1 billion, this is over 5 times more. So a simple calculation will show us a fair price compared to Lyft. A market cap of $100 billion divided by revenue of 11.3, we get a price to sales ratio of 8.9. This is actually almost the same as Lyft, at 9.5 right now. Meaning if Uber goes public at $100 billion, it will be a slightly better value than Lyft. Uber is going for 5 times the price of Lyft, and they made 5 times more money. This makes sense so far. But revenue is not the only valuation metric, so we have to look at more numbers from here. They also disclosed a net loss of $1.85 billion in 2018. This means they're not a profitable company. Lyft had a loss of $911 million, about 50% of Uber's losses. Comparing just scale, Uber technically lost less money, since they made 5 times more money and only lost 2 times as much. So Lyft might be draining more money right now. If we were to price Uber higher than Lyft, for example a market cap of $120 billion, which is more expensive, they would need some advantages over Lyft. Let's take a closer look at the S1 filing and skip the boring stuff. This revenue of $11.3 billion is up from $7.9 billion in 2017, making it a 43% increase year over year. But Lyft had a 100% increase, so stronger growth here. Their users of both Uber and Uber Eats were up 35% year over year. For trips, they're up 40% from the last year, giving 1.49 billion trips in 1 quarter compared to 1.09 billion a year back. So we see an average increase of 40% in 2018 compared to 2017. This is very important because growth is usually what determines stock price movements. If a company grows revenue by 100% in a year, we might see huge spikes in the stock price like we did Amazon. So a 40% increase is pretty good, but not amazing. Some heavy growth stocks like Spotify saw over 70% a year for a few years, and Lyft saw 100%. If Uber keeps growing around this rate, the stock price should in theory go up with growth, which is not dramatic. Let's move on to risk factors. These are what Uber wrote. A big risk is driver employment status. If drivers were reclassified as employees by government law, rather than independent contractors, this could cause a huge change in the structure, having to pay employee benefits, taxes, and penalties. They don't think they could afford this business if that were to happen. Uber has faced a lot of issues with their employment structure. Taxi drivers don't think it's fair that drivers don't need special licenses to drive for Uber. Another risk is competition in the market. Uber says they will continue to lower rates and offer greater incentives. Uber has big competition in Lyft, which is taking about 30% of Americans' market share. But Uber has a lot of growth worldwide. Competition means lower prices, which reduces revenue. But if Uber could actually beat Lyft altogether, they can raise the price a bit in the future. But until then, this means even more losses. Operating expenses. They're expecting to pay a significant amount in the future. They're not even profitable, so this could be a problem. A company that only drains money from operating expenses will likely not grow in the market. The next is brand perception. Uber has faced some bad publicity in the media about the CEO, but they hired a new CEO and are recovering from here. The next problem might be government regulation that stops Uber's service, which could cause great losses. Injury or death while using Uber products can cost them a lot of money. Basically some high-risk problems here. One big warning about Uber, Uber thinks they'll never be profitable. Since their inception, they lost about $8 billion so far. This will likely not change in the coming years, unless something big happens, like Lyft going away, or driverless cars, giving them bigger margins. The question is this: will Uber grow big enough to justify the price? Will Uber be the next Amazon, which had no profits for many years, but expanded so much? They beat out most of their competition and started making money. We'll have to look at their future plans. They currently have 3 big platforms: Uber for ride-sharing, Uber Eats for food delivery, and Uber Freight for shipping stuff. They also have bike sharing, just like Lyft. Bike sharing and Freight are low revenue right now, but Uber Eats brings in about 10% of their revenue. They invested in future technology, like self-driving cars. This actually cost them a lot of money, hoping to use no-driver cars in the future for a cheaper ride. Even with this technology, they're still expecting no profits in the future. Their platform is much bigger than Lyft, and their future plans are bigger as well, so we could give them more worth based on possible future expansion. Let's do some simple math on the possible worth of Uber. We have a low point of $100 billion, they might go as high as $120 billion, so what's a good price for Uber? The price is exactly at the same price as Lyft after the drop. They should be worth about $108 billion. This is right in the middle of the low and high points. We get this number using the price to sales ratio, or the revenue. Based on a revenue of $11.3 billion last year, we should see a $108 billion market cap, which would be the same as Lyft. This would be a good place to start. Lyft is $56 right now. If Uber comes out with the same number of shares, their price might be $302. Obviously this is way too simple of a comparison. Let's add some factors like future growth. We saw Lyft having a 100% revenue growth last year, with Uber growing at 40% revenue. This means Lyft has more potential to grow. A smaller company can expand much faster than a bigger one. But Uber has more platforms in general, such as Uber Eats, Uber Freight, future automated self-driving. This gives them an edge even with the slower growth. Uber has 70% market share in North America, compared to Lyft at 30%. Uber is also in 63 countries, while Lyft is only in America and Canada. So Uber is a bigger company, giving them more room for safety. Their name is also used in everyday conversations. We might say let's get an Uber, but we hardly hear let's get a Lyft. They also have Uber Eats, which accounted for 10% of their revenue. This is one of the largest meal delivery networks ever. Let's say we add 15% for that safety aspect, and for growth, we add another 15%. But subtract 10% for slower percent growth. That's an overall 20% more potential compared to Lyft. Adding 20% to 108 billion, that's about 130 billion. So do I see potential like this for Uber's future? Yes, I do see the potential, because they're the biggest, and they're the most ambitious ride-sharing company. Saying that, I also see a huge amount of setbacks. All the risk factors they mentioned are life-changing. If the government makes a huge change on employment structure, Uber could drop the very next day. The fact that Uber says that they won't be profitable anytime soon is not a good sign. We want to invest in a company that profits. Otherwise, it's just a money-draining operation. A company like Amazon got away with this for a lot of years, where they invest all their profits and didn't profit until recent years. Can Uber be the next Amazon with their extra investments? That's hard to say. Right now, they only have a few sources of income, so our investment would depend on Uber Eats and Uber Freight mostly. If we want a good margin of safety, we can price Uber lower than Lyft right now. If Uber goes public and drops to $90 billion, this might be safe enough to invest in. Under $80 billion would be a great price. I would buy it at that price. For my personal ranges of prices for Uber, I would say $90 billion would be fair. 100 to 110 billion might be pushing it, but definitely possible. And over 110 billion would be very overpriced. I'm definitely not recommending anyone to buy this. It's technically overpriced at any range because they don't have profits. But I will say that 9 billion is pretty fair, and 120 billion would be very overpriced, and will only be based on speculation for future growth. In conclusion, I think Uber will hover around $80 to $110 billion for a while. Buying this at the lower end would be a better idea. Before you buy Uber or Lyft, think of it like this. Would you buy a company that loses you almost $2 billion a year for a chance at huge profits in the future? Maybe more than 10 years down the line? Because this is exactly what you're doing when you're investing in Uber. It's very high risk because of this fact. They either beat Lyft and become the go-to ride-sharing app in North America, or new laws and regulations burn both companies, or they keep losing money forever. This is too high of a risk for me, so I would not buy it unless it's under $80 billion. As someone who's using both apps, I can definitely see why they became popular. They both have the price of a normal taxi, much more convenient, and they offer coupons at $5 off. You're only paying about 1/3 the price of a taxi. In terms of service, I like both Uber and Lyft, but Uber is my go-to app for ride-sharing, so I have a bit of bias here. Even so, I think both companies are overpriced right now. Subscribe and leave a like for more investing videos. I make them every day. And check out my stock market group below. You could have seen me buy Aurora Cannabis before this 50% spike. I also left links to the best investment apps right now. It's in the description below. Keep watching to analyze the best stocks the Monk way.